Good evening, everyone. Thank you for joining us today. Today, we have Amit who's joining us, who's going to be covering a series on the domains and opportunities in fintech. I'm going to pass it on to Amit to get started with his introduction, and then he's going to walk us through his session. If Just a couple of guidelines for the audience before that. If you have any questions, please feel free to drop the questions in the chat box as we go through the session. In case you have any questions that you'd like to ask by yourself, park them until the end when we have the Q&A session. The basic sanity check applies for most of the audience who's sitting in the room. That is the SMM guidelines. Masks on at all times, and also no food consumption during the event. Amit, I'm going to pass it on to you to get started. Firstly, welcome to NUS. We look forward to this session.
Sure, yeah, I can do the mic or no mic. Thank you, Sanjana. Hello, everyone. Thank you for joining in this evening, and special thanks to Manoj and the NUS Finance Club for inviting me today. It's a pleasure to be here. So yes, my name is Amit, and I'm really excited to be here and talk about finance in general. But I just wanted to spend some time on sustainable finance, which is a specific flavor of my topic today. And I hope that after this talk, you will be somewhat aware about what are the latest trends, developments, and activities happening in the sustainable finance zone. Um, as my background in my official capacity, I head the fintech vertical for Reebelo, which is a sustainability focused re-commerce. It's re-commerce and not a e-commerce because we are into refurbished and used goods. So we will talk about them as well towards the end of the slides. Great. So as a personal background and the professional background, I have been in the finance, fintech, insurtech, and insurance space for the last 7 years. I am currently with Reebelo in the fintech category, but before this, I was heading APAC region for Cover Genius, which is a global insurtech headquartered in Sydney. And before that, I was heading products for AXA in India, creating new products which leverage data technology and emerging platforms such as blockchain, machine learning, AI. So I'm very happy to talk about those points as well today. And without any further ado, I think we can get started with our first slide. So over the next, let me just change this. Over the next 45 minutes, what we'll go through is an overview of what sustainable finance means. What are the ESG factors, which are environmental, social, and governance factors, which usually come around when we talk about sustainability. I don't know how many of you are familiar with the Sustainable Development Goals, the SDG that the UN set in 2015 for 2030 and 2050 respectively. But if you are, then it's going to be very helpful because we may touch upon one or two goals for climate change and sustainable development, for example, in details today. I'm then going to talk about fintech at Reebelo, what we are trying to do at Reebelo, where I currently lead the fintech team. We're going to talk about, in general, what are the traits that we look at in terms of recruiting our people, and in general, what are the traits that you can have as a finance professional that can help you get absorbed in the finance industry in general, and fintech industry in particular. We will talk about what are the emerging opportunities in fintech as well, which are the hot areas which are exciting for young people like you. And we can take any questions if you have on any specific topic as and when it comes, right? So please feel free to raise your hands if you're online, or if you're in the room, feel free to just interrupt me and we can have a chat on that. So even before we start the conversation, I just want to um, take you guys through. Just a second. Right. So I just want to take you guys through why is sustainable finance even important, right? Why should we even care about sustainable finance, and why now? What has changed now that it has become even more important? So on that, this thing that you see right now is just today's Google News articles when you just Google climate change. That's okay. So, there's an Israeli study which says the storm levels that we are seeing now, it's already what we should expect much later in the timeline. One of the rarest UK corals is set to expand the range, moving away from the shores because it's seeing changes in the sea. The cost of climate change is also increasing day by day. Um, it could release some world ending bacteria as well. There's a research article on that. There are some areas, and I'm familiar with one of them as well, which is Delhi during late year ends time, like November, December, which also breathes very extremely toxic quality of air. The air quality there is like often above the scale of 1,000. So, and of course, there are tensions in the geographies between countries because of the stress on the natural resources being caused by the climate change. So all of these are real impact of the climate change. It's not even like it's something from the whole year, right? These are drastic events which have happened just in a span of 1 to 20 hours ago, right? So you can see these are like the latest which are happening as we speak of it. So it's supremely important that we, who are the torch bearers of these financial industries, which actually controls the entire economic movement of the world, because people in the room, people who have joined us in the call today, would be the future CEOs, CFOs, advisors, consultants, and you would have a good power in your hands to change the way decision is being made. So I just wanted to bring this to your attention today, and this is the sort of context that I wanted to start with before we move to the next slide, which is what exactly is sustainable finance. So when you see finance, right, it's the traditional finance, which is we have banking sector providing cash and other related services to the consumers. We have loans, bonds, and the usual banking instruments that were available for everyone. We have corporate finance, which deals with corporate loans, governance, and everything else. And we have insurance, which is a age-old industry as well. And this has been in the existence from like super early ages, right? So I was just googling today. I think the earliest history we have of a bank is around 1590s or something. So these industries haven't really changed a lot in the terms of how they're operating even today. Then we have fintech, which has payments, which is e-wallet, cross-border payments. So right now, if you see apps like Revolut, Nium, and you have PayPal, TransferWise, all of these apps have really streamlined the payments processes with us. Sending currency across borders has become super easy, and it's because of apps like these which have really bridged the gap in terms of regulations, technology, and literally brought human lives together and closer. We have new age lending instruments, which a lot of players are called BNPL. It's called buy now, pay later. And the examples for this is Atom, Hula, Cashify, and Pay Later, and all of these um, companies which offer credit scores based lending to the consumers. So what it means is they will invite you to join the platform. They may ask certain data profiles on you, like they may ask what's your background, how much income you have. If you don't have an income, are you a student, where do you study, and so on and so forth. Basis of which they will come up with a risk score for each individual, which would be the main characteristics of them defining your credit limit. Then we have insurtech, and the way they differ from your traditional insurance companies is that these insurtechs are tech led. What I mean by being tech led is that they have a very digitally native product which the consumers can consume. Insurance, if you see, is very fascinating because at the face of it, it's just a piece of paper or a PDF which says that, hey, person XYZ, we cover you for a particular promise. And the promise is that when you actually damage your asset, which is being insured, we will come into the picture and we will repair it and give it back to you. The asset can be your car, it can be your phone, it can be your house, it can even be your personal health. So, what insurance companies really sell is not a tangible product, it's rather a service, which is that in the moments of adversity, they would come into the picture and they will start helping you. using their service ecosystem. So essentially, insurance companies are just selling a promise, and whoever sells the best promise gets the best people, right? So insurtech are just helping these insurance companies sell that better in a way that they have the technology and they have the tech stack, which is essentially the APIs, which is helping them distribute these products better. Sometimes you would see this term getting associated with is called SaaS. It's just software as a service. What this means is instead of selling my software as a one-time purchase, what I do is I define a package. Instead of charging them $1 million for a year, I'd say, hey, you know what? You can pay me $100,000 for each month. And in return, I give you my technological platform. I will help service your customer and I will make sure that all the operational aspects of managing a particular product is managed by me. And by me means by the insurtech company. So that's the few advancement which started mid 2000 and it is still continuing now. Insurtech is still a recent phenomena. So if you ask me, it did not start mid 2000. It was even later. It was mid 2010s, but still it's clubbed into the same tech bracket under fintech. And now is the most exciting part, which is the decentralized DeFi and blockchain and every other ecosystem. So this is phenomenally more powerful and more there are more opportunities to be unlocked in this area. The first element of decentralized is peer to peer. So historically, if you go and buy a loan, right, you would approach a bank and the bank will ask you certain things before they even consider your application, right? The things can be how much of collateral can you submit to the bank, and collateral is nothing but any asset if you have any historical proof that you are capable of some wealth which is locked in somewhere, right? So that's number one. Other things that the banks may ask is, why do you want to use that money? Are you going to build a hospital or are you going to just use it for personal gains? Some things like that. And basis of that decision making power, they are the sole determinants of your future in terms of granting you that loan. How peer to peer differs from that thinking is essentially the way banks work is they collect the money from people, right? So they will take your savings account, they will take a corporate account, and they will have some government bonds where they invest. And then they will pool that money and then they will have their own allocation criteria that they will use to disperse that money, right? And the allocation criteria we just discussed. How peer to peer differentiates itself from that is it's essentially a random person distributing his own personal money to another random person. As simple as that. Now, there are of course concerns here that this transaction may be unauthorized. How do I ensure that if I have a couple of $1,000 which is being lent out to a person in some part of the world are actually judiciously used? They are not being defrauded or they are not being used for any illegal means. How do I as an individual make sure of these things when I register myself on the peer-to-peer networks? And this is where the platform really comes in, right? So platform's duty is to ensure that whoever is coming to ask loans from them, they do a proper KYC, right? So they ensure that they have the proper identity documents, they verify where the person is physically located, and they have some information of what are the capital that is being required are required for. In such a case where such a verification is possible by the peer-to-peer platform, it becomes phenomenally more interesting to see that peer-to-peer can be super non-friction process for the people to get the loans, right? Because imagine a bank who is issuing the loan has to have offices, right? So you see the largest tallest building in Singapore are actually banks, right? And it takes money to keep these buildings up and running. It takes money to pay the cost of the salaried employees. It takes money to keep the operations up. But peer-to-peer is just an algorithm. It's just a piece of code which some software engineer has defined and is being currently improved on. So the capex, which is called the capital expenditure, right, and the operational expenditure, which is called opex, both of these terms combined for a peer-to-peer model is drastically lesser as compared to a physical loan. And this means that if you were getting a loan of about 11% interest rate from a bank, you can actually get as low as 2-3% from a peer-to-peer network, just because of the economies of scale and the difference in fundamental models of how peer-to-peer work. Replicate this across insurance, and you have the last um, line item in decentralized, which is called DeFi insurance, which is based on smart contracts, right? So right now your insurance is being, in case someone has exercised the insurance, it would be assessed by a manual surveyor. So in case you damage your scooters, your cars, there would actually be a person, in all the likelihood, he or she would come and visit you and assess how much damage you have done, and basis of that assessment they would issue the payment to you after deducting some amounts, right? It's a hassle prone process. We all have been there, and we all hate insurance companies, frankly, because of this, right? But where smart contracts really come in is the fact that they make this process very seamless. They make sure that we are using the technology to ensure that all of these verifications and all of these checks are automatically done to a fair degree of accuracy, right? So when I say accuracy, imagine instead of a person coming and visiting your car, it's an algorithm again, right? So the owner of the car can record the damage done on the car. There can be a very smart artificial intelligence powered computer vision algorithm which can detect the severity and quantity of damage on that particular asset, and they can quantify the damage level also. So they can say the damage level on this car is potentially 60%, and the estimated cost of repair is coming around $5,000. You know what? Here's $5,000. You can go and get it repaired anywhere. This is the phenomenal change that is super seamless for the industry, because imagine instead of waiting for like a month, you have $5,000 cash with you and you can get it repaired right next door, right? That's super convenient. So this is why decentralized is super exciting, but there should be appropriate rails and safeguarding the frauds and other elements, which are also not a distant dream. I mean, we are living in the era of self-driving cars. We are shooting for the Mars. So this is something which is very doable. In fact, it's being done by some of the players in the industry right now, which I'll definitely recommend you to read about. So what exactly is sustainable finance, right? So if you move to the next part, it's actually the same usual finance, but it's just done with a careful consideration of ESG factors. Now, some of you who are aware about the ESG factors, they mean environmental, social, and governance factors, right? So why should we consider the ESG factors? Like, why should a CFO at a big company even care about what is his company's impact on the environment, right? He just have to maximize the profits. I don't think so. If you see, ESG is becoming the driving force behind the economic powers of the world. I don't know how many of you are following the Australian elections, but those who are would know that it's heavily tilted towards the candidates who are pro climate change, who are supporting the green movement, and who are considerate of the ESG factors. Why is that change being triggered? Is because the generations realize it's too late. Cities are actually getting flooded. We are seeing black swan events every now and then. The whole world economy as we speak right now is crashing down, right? Those of you who are investing in the stock markets would relate. I mean, just check your portfolio today versus last year. Like last year we had COVID and still it's super down, right? Why all of these things are happening are a mix of very convoluted factors which has multiple players, multiple forces at play. I mean, all of you would have done a course on macroeconomics. You know what impacts the GDP. It's the external forces, it's the market factors, it's the political and economical factors as well, right? So today I just want to ask an open question, right? And because I assume you guys are actually very well capable to answer this, what do you think is the gross domestic product of your next door neighborhood park, right? What would be the GMV in the e-commerce terms of your next door park? If I ask you what's the output value of your next door park, how can you go on about computing this value? Even think about this value. I just want some ideas. I want some thoughts that, hey, Amit, I think the value of my park should be around this range. I want to know how you are thinking about it. I don't want an exact number, but I want some thoughts on how you think your park should be valued. And I'll pause here for the next 2 or 3 minutes to get the answers.
If anyone in anyone on Zoom also has the answer to the question that Amit just asked, please raise your hand. You can use the hand function on Zoom. To rephrase that again for the audience on Zoom, the question is, if you were to compute the GMV of your neighborhood park, how would you go about the process? It doesn't have to be an accurate answer. It could just be your thought process. It's a tricky question. Yeah, I can see some pen and paper out in the audience. Why don't you get them started with it, and then we can see how it goes from there.
So look, guys, I do not, as I said, I'm not looking for a like $1 million number. It's not a math exercise. Great, yeah, I like that. So the number of people visiting a park has definitely an impact on the value because people are deriving a sense of satisfaction, right? You go to watch movies, right? You pay to the movie theater, right? You pay because you enjoy that experience. Imagine if I start ticketing a park, right? The next day, I will start getting some money, right? So it will contribute to the GMV of the park in some ways. And I don't know how many of you are aware of this term, but there's a term in economics called externality, right? So I'm really talking about externality here. A park is a positive externality. And according to the Keynes economics theory, these are very exciting factors for economy, right? So just to give you an example, right, how I want to think about environmental factors is think about the value they generate for the people, right? So if I ask you, Madhur, right, what would be the value that you derive from parks? What would be your answer? The best value, like you would go to the park because of fresh air, oxygen, right? We have to live with it. So I mean, it's common information how much oxygen does a normal average tree produces in a year, and we do have oxygen rates with us as well, right? So I mean, that's commercial oxygen, blah blah blah, but that's one way to calculate that this is the gross output of oxygen in some monetary terms from the park. The surprising part, and often this is the most saddest part right now with the finance industry right now, is that we are trying to proud ourselves on the never growing profits from organizations at the cost of decreasing GMV from our environmental resources. So we are depleting our Amazon rainforests, we are killing our coral reefs, because there's too much of dumping of chemical ecosystems in in the surroundings, and we are saying this is all for certain $1 million in the profit. But what people are not calculating is the degradation and the value of this degradation. So hypothetically, if I say that Amazon rainforest has potentially a $5 trillion GMV, or a gross domestic output, right? And if you cut maybe 25% of it, right, it's a mind-boggling amount what you have reduced. For what? For potentially $100 million profit. It doesn't make sense. You know, if you're talking big numbers and you're big trying to impress your boards, I really want the boards of future, right, which would be potentially having you people in them, to question these leaders, right, so-called CEOs, that okay, the profit sounds good, but where is the real source of this profit? Is it sustainable? What can we do to make it sustainable? And that's where the ESG factors come in. So if you go to the next slide, these are the major ESG factors. So if you see the environmental footprint, which is the carbon footprint, which is the most common term that a lot of you would have come across so far, right? If you are flying an airline, they will tell you that this flight ticket had exactly this much amount of carbon footprint for your personal individual trip, right? Because they are trying to make a cognizance of that fact. There is energy efficiency. Now all the electronic appliances are coming with a star rating on how much energy they consume. There is water usage. Did you know that my gene would have used gallons of water to get to this state as it is right now? And that's not just the washing water that has gone inside it, it's also the water that is used to build cotton, right, which is used to build the jeans, right? So it's all the way from the start of the ecosystem to the end product where we have to be sustainable. If you see the social impact, right, so it is, are the organizations doing finance in a way which is preserving diversity, or are we killing diversity, right? Are we just maximizing profits at the cost of harming a particular society or a community, right? It can happen. If you want to build a resort on an island, you will potentially forsake the diversity part. You will say, hey, it's a small community, I will uproot them for this resort, and maybe the resort will generate me profit. But that's not how we should think about profits. Finance needs to change its definition. So diversity is a very important aspect. Health and safety. Okay, you have a new contract for mining, a coal mine in Australia, but potentially, as the CEO of that company or the CFO of that company or the member of the board, that it may endanger the lives of the people who work there. The least thing you can do is invest in the security of those employees before you pass the financing. That's all is required. If you go back to the last slide, it is not, there are no rules here. There is no governance that, okay, you have to offset the carbon footprint. It's just careful consideration. That's all is required. Honestly, if we start having a question mark behind these financial decisions, I think we are heading towards a sustainable future and sustainable finance as well. So the last part is really the governance, which is essentially the ability of organizations to do self monitoring. So it's the fact that without being audited or without being challenged by global leaders and people who care about the climate, you yourself produce a sustainability index, right? You commit to the people that, look, we are releasing these many chemicals, we are releasing this much of CO2, we are releasing this much of polluting, potentially toxic environments in the surfaces, and really work from there to reduce the impact of that activity. It's also to fight against corruption. It's very easy when you have a billions of dollars of budget or millions of dollars of budget to even buy out governments. It has happened in the past. It's not something new. So how do we ensure that there's no corruption, there's no incentivization of corporate or government bodies, is also one part of the ESG factors, right? So all of these things which we are seeing right now is essentially what will make finance sustainable. You have learned a lot in your fintech courses. You have learned how to value companies. You have learned how to make revenues grow, right? If you take care of these things while you're doing your computations, if you have a thought that, okay, the profits are these, but the cost on the living society was this, and the actual realized profit should be this minus the cost, that's the right way of thinking about the sustainable profits. So next time you meet a company executive, you should not ask them about the profits. You should ask them, hey, what's the sustainable profit you're making? Is this profit sustainable? Is it going to continue? Is it going to happen in future, or is it just a time bound activity? Right, guys, time bound activity can be for 100 years also, doesn't make it sustainable. The sheer cost of fossil fuels, it's skyrocketing right now, right? If you see crude oil, if you see gasoline, it's all skyrocketing right now because it's not sustainable. People realize this. That's why we are focusing more on green energy, solar power, wind energy, renewable energy. And that's the reason why it needs to be even more emphasized. So now I'm going to talk about the industry a little bit, right? Seeing we already are halfway over the mark. The fintech industry is very exciting, right? And there are a lot of progressive developments in the industry right now. If all of this really sounds exciting to you, I'll talk a little bit about my own employer, which is called Reebelo. For those of you who are really interested to know more, you can visit www.reebelo.com and see how we are trying to do our bit towards sustainability. But in a nutshell, what we're trying to do is we are a sustainability focused e-commerce. What we use is we collect old devices essentially, right? So it can be old phone, it can be an old watch, it can be an old monitor, it can be a mic, for example, right? Right now we are in the electronic space only, but the plan is to expand across more categories and more avenues where consumer buy durables. So it can be in the future, it can be a bag, it can be a chair, it can be a piece of furniture as well. But what we essentially are trying to do right now, the problem we're trying to solve right now, is make sure that the devices that we use are sustainability focused, consumed by other people as well, right? So if you feel that the life of your device is over, there are two ways you can dispose them of. You can either keep it with you can sell it off, or you can just dump it somewhere, right? That's a third way, which is not the most environmentally conscious way of consuming the device. Do you know how much of efforts it goes to produce one piece of electronics device, right? The semiconductor in it, the lithium ion battery. These require rare earth minerals which are not available in abundance. A silicon chip takes a very specific material to get built, right? Sometimes it takes gold to get built. So if you have Apple phone, you do have, in all probability, a precious metal inside the chip. It's maybe it can be a micro milligram of a metal, but it is there, right? So it's very important for us to ensure that these devices are used to their entire capacity. So what we do is we ensure that we collect such used devices, we refurbish them. And what we mean by refurbish is if it has a battery health of less than 70%, we install a new battery because it still has value. It still has a functional screen. It still has a functional touch. It still has a functional camera, which is a lot of components which are functional, right? Once we refurbish these devices, we again put it out in the market, this time with the assurance that these are quality assured devices. What I mean by quality assured devices is that you can rest assured in knowing that they will not die down in next 2, 3, 6 months. These are as good as devices, if not better than new devices. The only difference, they have been used before, but they have been sanitized, they have been packed again for the consumption of the next particular individual. Now, you may ask, how does fintech comes into being? So we can go to the next slide because we already covered this part. So of course, yeah, we are the world's fastest growing platform for sustainable devices. And if you go to the next slide, we believe in the future where everyone should have access to the best possible devices, right? And at the same time, we also realize that there's a lot of e-waste generated each year, which is a very fast growing waste stream. It's the fastest growing waste stream. Like the amount of people, and I do think you will also know someone, right? Or you may be that someone who always want to have the latest iPhone. I mean, I know a lot of people who also happen to be my friend. I was just speaking to one of them today that they want to have the latest iPhone with them always, right? And I asked them, what do you do with the old phone? So they say, usually we have a buyback program, which is very good. Buyback is good because you send your old phone and it gets recycled and it gets into new consumer hand. It's good. Some people have their old phones in the drawers, right? So it's just lying there in the drawers for years and years until it stops functioning. That's such a waste of precious devices, right? And I'm not talking in terms of the monetary waste. Honestly, I'm talking about the waste in terms of the resources that has gone in to make that phone. Someone has risked their lives mining for the precious earth metals which have gone inside the phone. And I think this is a fact which not many people know or care about. So, what we try to do is we try to build a platform where we can provide electronics to our consumers and make sure we have enough financial products to provide trust and convenience to our consumers. And this is where fintech comes in, right? So if you really go to the next slide, what we're trying to build is a super app ecosystem which is dominating the electronics category, right? And this is where the magic happens. We have telcos like Singtel, Verizon, which can provide us access to their consumers. We do have software editing platforms like Netflix also, which can potentially advertise our platform and get users for our platform, right? We have buy now, pay later players who can join us in our mission to provide these devices to the users at a fraction of the cost, right? So if I ask Manoj today that, would you like to buy PS5, it costs like $1,000. He may be hesitant, but if I say, hey, you know what, you can take a pay as you go package, just pay me like $10 a month and take it for 3 months, he wouldn't mind, right? So this is the difference, right? You collaborate with industry leading players to make sure that you really sell the vision to the end consumer. And how do you sell it? Using fintech. Then you have insurers. So imagine if I'm buying a new phone, how can I make the experience of buying an old device similar to experience of buying a new device? Of course, I can make sure the quality of the old device is as good as the quality of the new device, at least as much as possible, right? I will make sure the packaging is right so the user also feels happy, right? How I can add another layer of trust is by providing insurance on the device. So tomorrow, if I'm going to sell that phone, what I will say is, hey, this is the phone, and you also get a free insurance which can protect the phone in case there's any malfunction, in case any software issue happens, in case your camera doesn't open, it's insured. And to go beyond that, we can also cover for accidental damages, liquid damages, and theft, loss, anything, right? So imagine if I have that proposition delivered to my consumers, if I have that insurance going along with every device I'm selling at a very nominal price, it becomes a very exciting proposition for consumers to think and purchase refurbished devices. And that's where the insurance and the local sellers come in. They help us insure the devices we are selling. And then, of course, we have repair partners on the platform who ensure that any device that gets damaged gets also repaired and repaired as quickly as possible to get delivered to consumers in real time. So this is essentially the fintech ecosystem that we are trying to build. And in general, this has many components that you will see in any fintech company. There is payments. So of course, those of you who are excited about payments, those of you who are excited about cross-border payments can also have a potential area to look at a company. And in general, the industry also, the finance industry is also, payments is a very core aspect of finance. Insurance again is a very core aspect of finance. A lot of other players are hiring for insurance roles. So if you like insurance, not just Rebello, but there are multiple other companies who can be a potential go-to um, employers in the coming future. And as I said, telcos, brands, everybody is aware of about them. Everybody knows Singtel, everybody knows Verizon, and everybody knows Apple, of course, right? So, so that's the overall ecosystem that is currently our playing ground at Rebello. Now, how do we ensure that we remain eco-friendly way to buy, sell, and subscribe to electronics, right? Which is our three main goals. Is essentially to use affordability as a criteria. So we make sure that our quality assured devices are a no-brain are offered at a no-brainer price point to the end consumer, right? If a consumer starts thinking about, hey, this price looks high, of course, that's something we are doing wrong in that area, right? So we have to really, really make it affordable for the consumers to really trust us, right? So that's the first pillar. We have to make sure that there is trust in the system, and that's where the whole insurance, warranties, and other fintech products comes into the picture. And then we have, of course, have to make it sustainable. So even if we are selling phones, what we do is we try to offset our carbon footprint. And how do we do it is we plant a tree for every device sold. That's a specific initiative that Rebello has taken towards a sustainable commerce, digital commerce platform, right? And that's not a priority for many players, but I think we stand that ground that we have to do business sustainably. We do not want to just chase profits at the cost of damaging our ecological balance, right? So these are the three parameters that we look at. And I think if you go to the next slide, right, that's what the future generations are also looking for, right? So they are not looking for a plan which has like a $2 benefit to them, right? They are not running out after short gimmicks or small discounts. They actually review us 4.7 out of 5 on Trustpilot, right? And these are our customers speaking. If you see the reviews, right, they all are super happy to associate with the vision, not just because they are buying a piece of gadget, but because they can take comfort in knowing that they have bought the gadget in a way that has tried to limit or even completely nullify the impact on the ecological surroundings. So that was my pitch for Reebelo. I think I just had this set of slides, but I'm happy to take any questions. I'm happy to dive deep into any of the previous slides, especially the one for the fintech ecosystem surrounding all the players. Yeah, this one. So in case you want to understand more about any of the particular industry, I am super happy to talk about those. Otherwise, I'm very happy to take in general any questions about this talk as well. Thank you so much, guys. That was my time. My name is Amit.
Sorry, just to go back, Amit, you never introduced yourself like fully. No, I mean like from your entire work experience. I had actually like we had worked on like a whole intro bit, but of course I passed it on to you, assuming you would do it. But if you would like, I mean, we have time, so if you would like, take probably 5 minutes for that.
I can talk a little bit about my career journey and also my educational background. So, I am a computer science and mathematics engineer by my education. I graduated from IIT Kanpur in India, and I have been in the industry for about 7 years now. I started my first job as a data scientist back in 2015, where this data scientist term was not that common. So, of course, my family was really concerned whether this is going to be a good choice or not for my future. But turns out it really, really took up quite a lot, right? And I think data and artificial intelligence, machine learning are the most exciting forefronts of technology that there is right now. Those of you who are aware of artificial intelligence would know it has the tremendous power to change our future and change how we do things. I mean, your phones is a very valid example of a AI powered device. The camera in that phone, the processor in that phone are all optimized by artificial intelligence. And that is what led me to start thinking about how to include technology in insurance and finance. And that's how I started in insurance sector. I started with AXA in India. AXA is world's largest insurer, headquartered in Paris. Globally, we do billions of dollars in insurance premiums. I was heading the new products division for them. So what I did in that role was create new protection products for our consumers. And some of the products that I designed was super interesting. So for example, I designed a parametric insurance product to ensure the air quality, right? So what that product did was, in case you're in a region where the air quality suddenly goes bad the next day, you would be compensated as a business, you would be compensated as an individual user. So just to give you an example, right? You may think, hey, which business can buy air quality insurance? It sounds so boring, right? Actually, there are businesses. So if you talk about events space, right? So if you talk about concerts, if you talk about shows, if you talk about cricket matches, the organizers are concerned about this because they see a significant dropout when there's a degrade in the environmental parameters. So they have a very natural inclination to buy these sort of protection products. To just give you another example of another product that I underwrite, it was rainfall insurance. So it used to cover the deficit of rainfall received in a specific farm land in anywhere across the world, because we were using satellites. So I'm not sure if you're aware, but European Space Agency has two satellites, Sentinel-1 and Sentinel-2, in the orbits right now, and they have the power to map any particular point in the world in a span of about 2 times a day at least. So they can actually go and visit the point twice in a day. So what that helped us is ensure that we are measuring the crop growth. We are measuring the parameters which seriously can jeopardize the crops. So, for example, if there's a flooding, we can develop a strategy to eradicate or at least harvest the crops in a way that is the most optimal in that physical adverse condition, right? So that's possible. Another example of this is monitoring wildfires and bushfires. So, if you know, in Texas, there was a very large fire recently, and it was even larger in Australia, Sydney, back in 2020, I guess, bushfires in Australia. I was there in Sydney at that time, so I know the whole Sydney sky was black. And I'm not just making it, it was actually black. So what does insurance do in these cases? And more than insurance, look, because insurance finance, it's not a tool to minimize or reduce or even eradicate these calamities, right? They will continue to happen. Like if there's a flood, if there's a fire, if there's anything that's going to happen, it's going to happen. Insurance is just a way to make sure that the financial impact of that adversity is limited. That is all. We cannot stop earthquakes from happening, but we can make sure that the people who are impacted by earthquakes get displaced easily, get a new house easily, can build their old house as well, right? So we pay them again to make sure that they're back up on their feet. That's what insurance is all about, right? So that was my role in AXA. And of course, after that, I joined Cover Genius, which is an Australian insure tech. So chances are, if you have used Booking or Ryanair to book your travel insurance, travel flights, you may have seen a small pop up that comes below saying, protect your trip for just these dollars. So that's my product. So what I did was design innovative travel insurance products during the COVID times to ensure that our users are well protected. So to give you an example, we had an industry leading product for quarantine and refused admittance to the boarding area. So if, for example, you don't have COVID, but you have a higher temperature, right? It happens all the time. You may be rejected to get uh, to board the aircraft, right? And if you are in a very expensive country and you are tight on the budget, you may be forced to quarantine, where the bills can go as high as $200 a day. And if it's a 7-day quarantine, $1,400, right? It can be big for some people. It does not take a lot to pay like a $30 and get a quarantine insurance, which can pay all those bills, plus also arrange third party services to you. What third party services means is there's a doctor on call, always available 24/7 to you. There's an ambulance always available at a point of click or a phone call away. There are service support experts who can coordinate to bring your relative into the picture. They can fly you out of a country. They can do emergency evacuation. So all of these services were really given to the consumers. So that's the insurance product that I helped design. And with Reebelo, I've just taken this role up. So I'm really excited right now, and we are expanding the team. But the vision is the same. We want to promote sustainable consumption of electronics as a first pivot to our vision. But as I said, this is just a starting. We have already raised 20 million Series A. So it's just a start for us. And we have the best investors on board. Some of them are founders of Lazada and the chairman at the big corporations like BNP Paribas Cardiff, if you're aware of them. So the goal essentially there is to promote a sustainable lifestyle towards consumers, right? So right now we are in electronics. Soon we will enter consumer goods, which means that you can also buy furniture from us. You can buy luxury goods from us. You can buy handbags, travel luggages from us. And eventually we will expand to more categories to ensure that we provide that sustainable experience to our consumers. And all of these areas are heavily impacted by how you conduct your finance around this, right? So fintech finance remains a key strategy element around all of these businesses. So that's what I specifically look into, is the finance and the fintech element in all these companies. So that's my introduction.
Thank you. Okay, Spencer, just 1 second. So we're opening it up for questions. So if anyone in the audience on Zoom has any questions, please post them either in the chat box, or you could use the hand function to raise your hand and ask your question. Until then, I'm going to pass it on to Spencer. Spencer, do you need the mic? Okay, awesome.
Like how is that being done? Because I get the sort of the tech part or the fintech part of wanting to do it, but then you sort of have to align yourself with what we need people in the real world doing this for us. So how do you do that more effectively than, let's say, Apple themselves or the company or the EU now has I mean, within the EU, you can't sell products now that people can't repair themselves from next year, right? So I'm just curious in terms of sort of how that is different, how that is handled.
Sure. And that's a
Just-
really good question.
Sorry, just before that, to the guys on Zoom, were you all able to hear the question that Spencer just asked?
Sanjana, this is Meghna. No, the question wasn't clear to us.
Okay, I'm just gonna pass the mic on to Spencer just for the benefit of the audience on Zoom.
No, so sorry. Really interesting, but I'm just curious with that sort of intersectionality between the physical world and the sort of fintech part of it, right? With how do you actually improve on the physical aspect and make that more efficient and more sustainable compared to what is there now, right?
Thank you so much. I think that's such a relevant question for today's session. And just so that I'm clear, I'm just going to repeat it again. I think what you're asking is, hey, Amit, okay, all the technology element, all the finance element, and all the operational element we understand, we can see and we can relate to it. But how do you really implement this on ground? How do you make sure that the ground reality of this vision is actually not just like implemented, but efficiently implemented? And how does it compare with the best players out there, like Apples of the world? How do we do something that is actually better than them, right? So, of course, we are not a corporate yet. We are just a startup, right? We are taking our baby steps towards a vision which is super bold, super audacious. And of course, it keeps us humble, but it also keeps us engaged and challenged every time, right? Every time we see a bigger player than us, we get inspired, not because we feel that we should be bigger than them, but because we have so much space to cover, right? We have so much market to fulfill, we have so much opportunity to tap onto. So how we do it on the ground is essentially we are a marketplace, right? We do not own our own devices. So what this means is we essentially go out and invite shop owners, which can be small shops, big shops, they can be corporates, they can be even original equipment manufacturers, which we call the OEMs, which are just the brands like Apple, Xiaomi, Samsung, and so on and so forth, right? So we invite them to start selling through our platform, just as they do with Amazon, eBay, Flipkart, right? It's the same process. The only thing which is different with us is because these are not new devices where there's assurance from the brand manufacturer, someone has to come in and say, look, I authenticate that this device is really good. That is Rebelo's duty, right? So what we do is we have our proprietary algorithm, which ensures that each of the device, first of all, is properly assessed at the point of acquisition. So whenever, let's say, Madhur wants to sell on Rebelo, right? And he has a single device that he wants to sell on Rebelo. He would first download our app. He would diagnose his phone through an automated process. So it's just an app which will open up. It will ask Madhur to provide permissions for that app to run a diagnostics. And it will fetch how old is the phone, what's the battery health, does the screen works or not, is there any issue with the receiver, the Wi-Fi, and there are 65 parameters, to be honest, right? So there is a very robust process to ensure that the quality of device that is onboarded is above a certain threshold, but it doesn't stop there. Our vendors then refurbish the device. So what I mean by refurbish is if there are too many scratches on the screen, they will just replace the screen. If the battery is beyond, let's say, 60% health or below, we will install a new battery, because guess what? The phone still has value, right? Battery is not the only component. So when our users get a phone, or they get a laptop, or they get a tablet, or they get a Oculus VR, or they get a PlayStation, the agenda is to not let the users feel that they have a subpar device. The agenda is really to ensure that the device feels as good as a new device, right? So we do spend a lot of time in making sure that the look and the feel of the device is actually as per the conforms of our user requirements, right? So that's one. We are a marketplace. We have certain proprietary services, some technologies that we give to our vendors so that they can come and sell with us in a better way, right? Because now the consumers trust us, right? So if you have purchased with Reebelo once and you have seen the device given to you, next time you will recommend us to your friends, you will recommend us to your families. And that's how we grow, right? That's how we expand. Is essentially that trust in the consumer mindset that helps us grow, right? So that's the path we are taking right now. Of course, we are nowhere close to what Apple would do as of now, but we are aiming to go there steadily, and maybe someday we will reach there. When it comes to how we how we compare to other industry players, I think our proposition is completely unique in the market. Like, there aren't many players who sell used devices with a sustainability focus. I mean, you can go on Carousel, you can go on eBay, but these are pure play listing platforms where you would just see listings. Maybe you cannot trust the seller unless the seller has certain scores, right? The difference in our case is that we are the central party. Imagine tomorrow eBay starts saying that, hey, you know what? I have personally gone and seen the phone there. Do you trust it now, right? You would, because you trust the brand, which is eBay. The same is the case with us. We are investing our energies, our efforts, and our technology into making sure that there is enough trust in the platform. And that's our unique selling proposition. And that's why we believe we are doing something good.
Cool, thanks.
I'm just gonna pass it on to Meghna. Meghna, do you want to unmute yourself and maybe ask the question?
Yeah, sure, definitely. Thank you, Sanjana. And thank you, Amit, for the introduction to Reebelo. I think y'all are doing amazing work in the sustainability field, and that's really, really impressive. So I have a couple of questions regarding the fintech aspect of your business. But the first one would be, so considering your core business, which is refurbishing electronics, is already so technical, how come you guys have thought about combining it with a fintech stream as well? So why aren't you only focusing on the electronic side? Why have you combined a new fintech aspect to it?
Thanks, Meghna. I think that's a really, really interesting question, and it's a very relevant one as well. So I do believe we did not start the fintech vertical right in the beginning. We were getting the house in the order. We were making sure that we know and do our business very well, right? And only after reaching a certain threshold, like $100 billion a year, we started thinking, hey, how can we make it better, right? How can we make this $100 million into potentially $1 billion? And that's where the thought really cropped up, that we should do something that really bridges the trust deficit that the consumers may have. And I was saying in my previous question is that when you're buying a new device, you really trust the manufacturer of the device. But when you're buying an old device of the same manufacturer, you still may have your own concerns, right? That, hey, it's an Apple iPhone 13, but you know what? I don't trust this particular seller. So how do you ensure that apart from your platform guarantee, which is your platform's selling point, that they verify, they authenticate, and they ensure the quality is good, how do customers still trust you? Because it's just your word against a particular skeptical customer, right? And that's where fintech comes in. So if I have a fintech product that can guarantee that if Madhur gets a software issue, or if the camera tomorrow stops working, or if there's any malfunction on the device, if I can guarantee that to Madhur, he would not think twice before purchasing, right? Because there's a guarantee associated with it. There's a physical proof that he will receive on his email, which will say that this is covered, this is covered, this is covered. And in case there's a future incidents like that, he can quickly come to me and I will service the phone in 2-3 days. So that's the reason why we started with fintech, and now we want to expand it. So of course, I can cover Manoj for the quality of my device. So I can cover him for the malfunction, for the software issues. But we want to go a bit further. So we also want to protect Manoj and Madhur for any accidental damage that they do on their own, right? So tomorrow, if they are playing and there's a cat, it jumps on the laptop and it maybe bites the screen, we will repair the screen. And that's an additional peace of mind we want to give to our consumers so that they just don't know that the device is genuine. They also know that there's a whole ecosystem around the device, which you see on this slide, which is essentially an ecosystem of fintech players, insurers, sellers, repair partners who are ready 24/7 for that particular consumer in case such a problem happens in the future. So that's essentially the idea behind having a fintech vertical at an e-commerce.
Okay, that makes a lot of sense. Thank you for that. A follow-up would be that so basically you all are focusing mostly on the insurance aspect in terms of fintech rather than payments, or could you, I mean, I probably missed this in your in your speech, but could you maybe elaborate a bit on how you're integrating payments into your ecosystem as well? Because I understand the insurance part, but I wanted to know a bit more about payments.
Sure. So insurance is one of the, I would say, pivotal aspect of a vertical. It's very important area because essentially it bridges the trust deficit. But what are we doing apart from insurance, right? So we are looking into payments. So as I said, if I'm offering a very premium device like an iPhone 13 or an Oculus VR or a PlayStation, some users may just not have enough purchasing power, right? They may not have enough cash in the bank to be able to make that purchase. So essentially, we are also looking at subscriptions instead of buying. How can you just subscribe to a device, right? Shift away from that ownership mentality and come towards really using the device, right? Because frankly, we all will know some person which will have some devices. I mean, I have a PlayStation in my house, but frankly, we have not played it for the last 2 months. I'm not making this up. So if you see that particular asset is just being lying idle, potentially it doesn't even work right now, right? So it's not really sustainable, right? So if I rather lease it out on Reebelo, start earning like a good $50 a month, who knows, I can take everyone out for a nice, couple of glasses of coffee, right? So all of these things are possible. So fintech essentially is about ensuring that our consumers can not only buy, they have other options to experience a gadget or a device or a particular consumer good. So leasing becomes naturally the second focus area for us. How can we enable leasing? And a third focus area, which is payments in credit, right? So there's, as I said, there's afterpay, which is the buy now pay later. So what it does is essentially, if you buy a $2,000 phone and you don't have entirely that amount upfront, you can just take a loan, a sort of a short loan. But this is not a loan which is like a bank which will ask you for 100 documents. This is just a loan which will ask you maybe for your phone number, maybe your sync pass. I don't know, like it's supposed to be very seamless, right? If it is not, our duty is to make it seamless. So that's the third element. Essentially, how can we enable a credit line extension to our consumers to be able to experience the devices which may otherwise be beyond their purchasing power? So that's the other two areas apart from insurance that we are currently focusing on.
Got it. Thank you. Thank you so much.
Right. So we are going to look at maybe one more question, which is, I'm going to take the one from Anar, only because Ronak, your question on sustainability roles, is it sufficient to have general awareness about ESG goals, policies, and frameworks? Or is it an in-depth knowledge through formal studies, training, etc. necessary? Just in context of the event itself, I'm going to pass on this question. But Ronak, I will reach out to you on LinkedIn and I'll give you an update on this. Another question is, how does Reebelo differentiate itself from retailers themselves, example Apple, who offer consumers the option to resell their devices to them?
Just before I answer Anar's question, I think I'll just address that one also. Guys, look, all that is needed for you to have a sustainability focused mindset is a passion towards sustainability, because it may not impact you right now. It potentially will not impact your next generation, but it is going to impact someone's next generation, someone's future, right? Honestly, there are courses on sustainable finance. I saw some on NUS as well. I mean, I saw a course at NUS for sustainable finance, which is great. But honestly, I don't think you need to get a professional education to start thinking sustainably. It's essentially it's very simple. It's not a rocket science. As long as you can question yourself and the companies and the organization, and trust me, when you do raise these questions, you will be valued. These are the things that are not a lot of leaders ask in their, this is essentially what separates virtuous people, ethical people from just typical businessmen in my experience, right? So that's my 2 cents on that. Coming to Anar's question, um how does I think we covered this in a little bit context in the previous question, where I answered how we are differentiating ourselves with major retailers like Apple, who offer the consumers to resell. I mean, reselling is just a functionality of our platform, right? If you want to sell your device, you can come to us, sell it to us. But it's also a marketplace, it's also e-commerce. So if you want to buy not just Apple devices, any particular consumer durable, the vision is very clear. We want to be in the space where there is the most severe ecological impact. Electronics was naturally one of the categories for me, but if you see luxury goods, that's also an area where there is a lot of ecological impact, right? So how do we differentiate? Of course, one thing is we are not a single manufacturer, single brand affiliated entity like Apple, which is just focusing on Apple ecosystem. We are across a breadth of electronics, which includes both brown goods and white goods, like your phones, laptops, tablets, and washing machine, fridges, refrigerators, ACs, so on and so forth. Right. So that's one differentiator. The second differentiator is we are not vertical agnostic. So right now we are in electronics, but maybe in future we expand that vertical into new verticals beyond electronics as well. So that's how we differentiate ourselves. I don't know if I was able to answer it exactly to the point, but that's my take on it. Oh, I was hoping I'd get something like this. Great. So honestly, if I'm being completely transparent, I do not have a use case of blockchain ready with me as of now. It may be because it's just my first month at Reebelo, but I do have a lot of ideas. I think blockchain essentially is nothing but a distributed, decentralized ledger, right? So it's a form of a database where you have a lot of transparency, like everyone can see what is making the money move on that particular ledger. Everyone can see when did that transaction happen, what is the address of the wallet where it is going. So if we have to really nail down a use case or a POC in decentralized finance, it may be a peer-to-peer powered credit lending ecosystem. Right now, we tie up with industry leading players to offer credit to our consumers. But in future, we would want to have our own credit facility, which can essentially be your money, which you are paying as insurance cost, right? Being pooled together into a decentralized vault. Okay. There's a smart contract, which is an algorithm which decides we should pay this person or not basis of the technology that is implemented. So it's essentially consumers' money being funneled back to consumers when they require it. So I don't know how many people know, but have you come across a term called mutual aid, or in India we call them chit funds, right? So the whole concept of a mutual aid slash a chit fund is that, and this is super, like this has been from ages, right? This is not new. This has been running because our forefathers and our ancestors had that wisdom to know that you need to keep a amount or certain portion of your wealth for future uncertain events. This is just that. So what we do is, instead of giving our premiums, which we call in the financial terms, to a central or a corporate body, we keep it in the transparent. Imagine a transparent vault right here, right? We all come and put $50 in that vault. Maybe out of the people in the room, one of us has a claim. We just make sure that he comes here physically, puts the phone in a machine, make sure that the machine reads the phone properly, and the machine says, yes, your phone is actually damaged, they would not ask you how it got damaged because they are exactly covering from that. So they will trust your conscience that you have not thrown that phone and it's actually been damaged genuinely. And they will say, okay, yeah, go and take $100 or $200 or maybe $500 from the vault and get your phone repaired. That is the power of smart contract. That's the power of blockchain, which can be implemented at any industry, and this can be a good use case for Reebelo, right? So instead of going to a centralized entity, a corporate, which has so many expenses to pay, right? So it's salaries, it's the expenditure on the buildings, whatever, whatnot. You just have a simple, transparent architecture of technology, which is taking all these calls, right? It's super smooth. But of course, there's avenues for fraud, which can be mitigated. It's not rocket science, but this is one of the use cases that I have in the mind.
I think that brings us to the end of the session, given that there are no more questions. I'm just going to pause for a second and just see if there are any other questions. Cool then. Thank you so much, Amit, for coming over today. We have a small token of appreciation from the NUS MBA Finance Club. I'm going to ask Manoj, who's our FinTech core member. He's not just FinTech core member, but originally supposed to be asset management, investment banking core member, but has flipped sides of late. But I'm going to get him to present the token of appreciation to you. Thank you so much for joining us, and we look forward to seeing synergies in the future as well. Oh, yeah. Oh, me? Oh, okay. Okay. Thank you. And thanks to the audience online for joining us for the event. The recording of the event will be shared soon after the session, hopefully over the coming days. In case anyone has any further questions that you would like for which could be either directed towards Amit or towards the Finance Club, please do send an email to the NUS MBA Finance Club email, and we will look at how it can be best addressed. Thank you, everyone.